The markets are surged to the highest point of the day. The Sensex and the Nifty gain 0.5% each, led by metals and auto stocks. Mid-caps gain in line with the benchmarks. Hero MotoCorp misses expectations on bike sales, but the sales of scooters sees a 60% surge overall, saving the day for the two-wheeler company. It also said that sales are picking up further with the festive season around the corner. ITC sees strong volume growth in cigarettes and in-line growth in FMCG, even as margins come under pressure. On the bright side, the company is seeing early signs of a demand recovery in urban consumption. Indian energy imports from the US are likely to increase 1.5 times in FY26, sources have told CNBC TV18. This, even as not buying Russian oil, can cause prices to spike and can weigh against any big shift. Good afternoon. You're watching us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormas Patakia, and it's some respite that the bulls are seeing on the screen today after the sell-off that we saw across Thursday and Friday. And the index has now crossed the mark of 24,700 at the highest point of the day is where it stands. Remember, the Nifty is coming on the back of 5 straight weeks of losses, and this is the longest losing streak that the index has had on a weekly basis since the last 2 years. And so we're seeing a bit of a rebound from lower levels. We also broke below last week's low on a closing basis on Friday, but we've seen a smart recovery from those levels despite that initial dip in the first 15 to 20 minutes of the trading session. You pull up the contributors and that will give you an idea of what is contributing to this move, because it is not the Nifty Bank that is contributing to it. The Nifty Bank at one point had almost slipped into the red, and there you can see HDFC Bank, ICICI Bank, SBI are on the laggards end. What's contributing is Reliance Industries. What is contributing is Bharti Airtel ahead of its results tomorrow, and Tata Steel after its results is also contributing to the gains, along with Mahindra and Mahindra. Some broader market results just came out a few minutes ago. Sumitomo Chemicals is one of those. The revenue growth was strong. There was also margin expansion as well. The broader markets have surged to the highs of the day. We are counting down to a lot of broader market earnings, be it from Marico, DLF, and Sumitomo Chemicals now 2.5% higher after that results announcement. ABB India, though, on the downside, continues to remain at the lows of the day. The top loser on the Nifty 500 index, 6% lower now after that earnings call commentary. And you can also see numbers now from TTK Healthcare on your screens there. Almost a 60% decline in its net profit, and it's showing up on the stock as well. 5% lower, taken a bit of a nosedive now has TTK Healthcare. But the pocket that is doing well, though, are two-wheeler names, and that is after their auto sales numbers and some earnings as well. Counting down to those earnings, Hero MotoCorp, TVS, Royal Enfield, all of them have seen a 19 to 25% year-on-year growth in their overall sales. Sudarshan is joining in with more on this. Sudarshan.
So it's been a good day of trade, especially for two-wheeler names, and that too Hero MotoCorp, which is amongst top Nifty gainers, currently up more than 3%, say almost 4% in today's trading session. And not only Hero MotoCorp, other names, if you take a look, TVS Motor is up almost 3%, Eicher Motors too up more than 2%, even Bajaj Auto is up almost 2%. And the reason is, for the month of July, except Bajaj Auto, all the other names have seen a growth, even in the domestic segment. So Bajaj Auto had seen a decline of 13%, all the other companies have seen a growth in the range of 19 to 25%. And if you take a look at the export segment, here even Bajaj Auto has seen a growth, and the growth for the all the companies has been in the range of 28 to 95%. So for the export segment, it was important for two companies, Bajaj Auto and TVS Motor, because contribution of both domestic and export segment is almost the same for these two companies in the range of 40 to 45%. For Eicher and Hero MotoCorp, the contribution of export segment to total sales is very minimal. Example, for Royal Enfield, export segment contribution is just 13% to its total sales. Now, amongst the major outperformers amongst all these names, TVS Motor and Hero MotoCorp. Why TVS MotoCorp? It's the beat across the segments. You take a look at domestic segment, has seen a very healthy growth. For export segment too, has seen a very healthy growth. Hero MotoCorp domestic segment has seen a growth, and it's two segments. Motorcycle segment has seen a growth of almost 19 to 20%, but the growth was below estimates. What has done very positively is the scooter segment. Here the growth has come, and the growth was of 64% versus an expectation of growth in the range of 20 to 25%. And now the outlook, festive season is coming, and one segment that has been doing well, especially in the festive segment, one segment that does well is the entry-level segment. And these two companies, both TVS Motor and Hero MotoCorp, have huge presence in the rural segment, and rural segment continues to do far better than the urban segment.
Continuing to do better than urban, that has been the story of the last few quarters. Sudarshan, thank you for that. And speaking of quarters, it was the earnings season that was supposed to determine which way the markets go. And so far, according to Motilal Oswal, it's been a fairly resilient quarter by their word. Now, according to their report that they put out earlier this morning, X of financials, their coverage universe has seen an 8% earnings growth this time around so far. And X metals and oil and gas, that figure is 7.5% on a year-on-year basis. Now, which are the sectors that have contributed to this growth? BFSI, tech, oil and gas, utilities and cement. Of course, cement has been an outperformer with 47% earnings growth this time around so far. And the utility segment too, seeing double-digit growth this time around as well. Of course, we are talking about the Motilal Oswal coverage universe that has reported results so far. Now, which are the sectors that contributed to that growth? Sectors that beat expectations. Metals, expectations were already bad. They've been better than those bad expectations. Auto has beaten expectations. Capital goods has beaten expectations, as has the consumer durable segment. What has not done so has been the auto segment. Of course, we are still counting down to a lot of numbers from Tata Motors, Bajaj Auto and so on and so forth. But so far, the auto sector has failed to meet expectations for the quarter this time around. What has done well, what has not done well has been PSU banks, oil and gas and real estate. So these are the ones that have missed expectations this time around. And if you talk about categories, the only segment that has missed expectations is the small cap category, a 9% decline so far this time around during the quarter. The other two, the mid caps and the large caps, have fairly met expectations more or less from what the Motilal Oswal was projecting. Now, out of the 50 Nifty stocks, 38 have already reported results, and those have seen an 7.5% earnings growth overall this time around during the quarter on a year-on-year basis. What have contributed, the stocks that have contributed to this growth? It was Reliance, HDFC Bank, ICICI Bank was the standout, of course, JSW Steel, Bajaj Finance, L&T, and Mahindra. Now, the stocks that have not contributed to this growth and have been laggards include the likes of Coal India, IndusInd Bank, HCL Tech, Kotak Mahindra Bank and Axis Bank, the two major banking misses this time around, and of course Eternal, and those have not managed to contribute to the earnings growth for the Nifty 50 universe this time around. Now, based on all of this, as Motilal Oswal has cut their Nifty 50 EPS growth assumptions by another 1% for the current financial year and almost 0.8% for the next financial year to 1110 rupees and 1297 rupees respectively. These are the Nifty EPS forecasts, and based on that, they say that their model portfolio tilt continues to remain towards the large cap names, which is 70% tilt still there, but they have increased their exposure to the mid cap names, the weightage of the mid caps in their model portfolio, to 22% from 16% on the back of better earnings performance. So that is how the quarter has been so far. We're counting down to the fag end of the result season. It will be interesting to see whether this resilient quarter continues to remain resilient, as Motilal Oswal has said. But the stock that came out with results on Friday evening was ITC, and there were a lot of moving parts to this, some good, some not so. Mangalam is here to summarize all of that, and of course what brokerages are making of it as well. Mangalam.
Well, ITC reported a mixed set of numbers where the revenues actually beat expectations, but margins were actually a lot lower than what the street was expecting. So as a result of which, mixed set coming in, and the stock price is reflecting that as well. No great shakes on either side. Mild green is what we're seeing. And the reason for that is because, one, while all the other FMCG stocks have done well, ITC has been a bit of an underperformer there. And valuations support ITC as well, as they always have at 22 times two-year forward earnings. If you look at the overall numbers, revenues closer to that 19,750 crores, much above street expectations of 17,650 crores as well. But as you go lower, the EBITDA at 6,261 crores, the street was working with a number upwards of 6,300 crores, and there's been a near 500 basis points disappointment on the margins too. The net profit has come in at 4,900 crores. The street was working with a number a little over 5,000 crores itself. So what was good? The revenue beat was led by, the cigarette revenue growth and the cigarette volume growth. Cigarette volume growth upwards of 6% is actually the highest that we've seen in the last many quarters, but that has had an impact on their margins as well because leaf tobacco inflation was fairly high, though the company believes that going forward that may see signs of, coming down or receding given the sort of crop prices that we've seen for this season. The FMCG business, there's been a margin decline of almost 180 basis points year on year on that one as well. Notwithstanding, quarter on quarter, there's been a near 60 basis points improvement. The second thing that led the revenue growth, apart from the cigarette business, which is the mainstay of the company, is agriculture. The agri-trading business saw revenue growth of almost 40% versus street expectations of 20 to 25%. This was one led by higher realizations and secondly by favorable policy on the exports as well. So while this has done well in this quarter, going forward, whether this continues to do well or not is something we'll watch out for since the government has gone ahead and imposed restrictions on wheat export once again. All said and done, mixed quarter and mixed performance for the stock right now.
A mixed performance indeed. Mangalam, thank you for that update on ITC. I'll take a short break here, but just before that, some flashes on your screen. The PAN 2.0 project is expected to go live in the next 18 months. The CBDT sources are telling CNBC TV18 that the IT department has awarded the PAN 2.0 project to LTI Mindtree. Now remember, this was the reason why shares of Protean eGov Technologies had seen a major knock just a few months earlier when they had mentioned that they were out of the reckoning of this PAN 2.0 project that the IT department was set to award. And now sources are telling CNBC TV18 that this project has been awarded to LTI Mindtree. It's showing up on the stock as well, almost 1% higher now on the stock, nearing the highest point of the day. We'll get Timsy on this in just a bit, but for now, these are what the CBDT sources are telling us. LTI Mindtree is likely to have received the PAN 2.0 project from the Income Tax Department. Take a short break here on Business Lunch. Here's a reminder of what our viewers unlock: a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, which is our premium members-only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interaction with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back. Now, US President Donald Trump has been putting pressure on India to stop energy purchases from Russia. The sources are also telling CNBC TV18 that energy imports from the US are set to sharply increase in the near future. We also understand from sources that crude oil prices could harden if India stops buying Russian oil. Sapna Das is joining in with more details on this. Sapna, tell us what more are your sources telling you with this regard?
Well, it's pretty much clear. The view back here in India is the fact that if we halt our imports from Russia, and which are quite sizable in quantity, this could really harden the international global, or rather international crude oil prices. If you look back in 2022, March 2022, just after Ukraine war had broken out, there was a fear of a lot of the Russian oil going off the market. And at that point in time, also, you had seen crude spiking to around $137. But coming back to the present scenario, in fact, back of the envelope estimates within certain sections of government indicate that crude could spike to as much as $200 a barrel if, if a large chunk of the Russian oil goes off the market, or if India halts those imports from Russia. Also, we need to be mindful of the fact that in all these years, India has actually followed all the possible international protocols in terms of sourcing crude oil from Russia. Now, let's just look at the numbers as to how important we are as a buyer of the Russian crude and what kind of numbers Russia talks about. So basically, 4.5 million barrels per day is the kind of exports that Russia does, out of which almost around 1.8 to 2 million barrels per day is what India buys from them. Also, we need to keep in mind that almost 10% of the global demand, that is around 9.5 million barrels per day, is what Russia produces. It is the second biggest producer in the world. So, to speak about Russian oil going off the market or India halting its imports from, from that country would basically really cause a shortage of oil supply in the global markets very clearly. So this is the take here, and I think in the coming days we'll know more. But I think the stance back in India is very clear that the imports are not stopping, and Russia will continue to be an important oil sourcing partner for India.
Indeed, Sapna, thank you for that update there. Now, the Organization of Petroleum Exporting Countries, or OPEC, has also announced that it will be raising crude output in the month of September. Manisha is here to tell us more now. Following previous months of increase, another increase this time around, Manisha.
Well, yes, the crude oil prices have declined for a third straight day, and this is after the OPEC Plus meeting over the weekend, where they are looking to increase production further on in the month of September as well. Remember, with this, OPEC would have brought in much of its output cuts, the 8 members that is, and that seems to be weighing onto the prices. But not so much, because that Russia sanction threat is still at large in the global markets there. So when you look at the Indian crude imports overall as a picture, prior to Russia's invasion in Ukraine, the number was quite small. 85% of India's imports at that time were from GSS countries, like the Gulf countries, that is. And when you look at the imports from Russia, they were a minute 0.2 to 0.5% at around $5 billion worth. But post-Russia and Ukraine conflict, and because Russian crude oil was available at a much discounted rate, we did see India and China start to buy a lot of it. So from 0.2 to 0.5%, what we did see in the first half of 2025, those imports surged to a huge 35 to 40% of overall Indian imports as well. That is where they begin. Also, when you look at the Kepler data more closely in sense of numbers, then for the month of June, we saw Russian imports of crude into India at 2.1 million barrels per day. By the time it's July, we've seen a decline to 1.8 million barrels per day. But 35% for the first half still stands in sense of imports from Russia there. Now, the markets are looking at those important deadlines where we have US pressuring India to cut its Russian oil imports. US also is pushing for a peace deal between Russia and Ukraine. There's a deadline by the end of this week. If that does not happen, then there is a 100% secondary sanctions that we are looking at for buyers as well, and there could be more action and reaction too. So with this, the markets will focus on Friday. That is when the US president says a deadline there lies in. Now, there are a couple of scenarios to this. If US does go ahead with the restrictions on Russia, the markets tell us, and many of these banks and brokerages also have come out with reports suggesting that this could take the crude oil prices in a 3-digit territory above $100 a barrel, because Russia does produce, it's the second or the third largest producer in the global markets there, and with the kind of production Russia does, OPEC members will not be able to meet that. There's not enough global spare capacity, and you will see that knee-jerk reaction come in for the crude oil prices. A second important thing is that annual bill for Indian markets would also balloon by nearly $9 to $11 billion, because that discounted Russian oil, if that stops to come, and if India has to buy it at the high prices, then we are looking at that bill also going higher. India, remember, is the world's third largest importer and consumer for crude oil, and that will shift a lot of markets and prices in the international markets. So it's going to be very important this week, by the time this week ends, on what really happens with Russia, Ukraine and US, and whether or not we actually see that ceasefire go through. Unless that happens, we would be looking at very strong numbers coming in.
Manisha, thank you for that, and that is the reason why crude prices continue to remain resilient despite this another increase coming in from OPEC and its allies. Now let us also listen in to what experts have to say about India cutting back or reducing Russian oil imports.
India is hugely dependent on Russian oil. We're a major oil importing country. We don't have a trade surplus overall. We have a current account deficit. And it would be a major blow. There's no question about it. And I don't think the government should agree to this at all. But in any case, no country should be bullied into this to look after their own fundamental economic interests by these kinds of very extreme bullying tactics. Now, if we stop buying Russian oil or reduce it, I think that's extremely unfortunate. We really need to keep our sources of supply as diversified as possible. The push is to make everybody buy very expensive US natural gas, which is not in our economic interest. It's, by the way, not in Europe's interest either, although they've agreed to do it.
Take a short break. On the other side, we get you excerpts from the conversation we had with the management of Tanishq on the outlook ahead and the likely impact of the US tariffs on their business. Stay tuned. Welcome back. Now, Tata-owned jewellery brand Tanishq has rolled out diamond expertise centres designed to give buyers scientific clarity and full confidence while choosing their diamonds. CNBC TV18's Shivani Bajaj spoke to Ajoy Chawla, the CEO of Tata Jewellery segment, and the company's plans for lab-grown diamonds and the likely impact of the US tariffs on the gems and jewellery sector. Listen in.
About lab-grown, it's a very recent phenomena. There are many players who've jumped in. Prices have been dropping significantly. Hopefully in the future, penetration of diamond-studded jewelry in the country will go up because of that. But right now, it is still less than 2% of the total diamond-studded jewelry market. If I think of it from an all-India perspective and overall perspective. With the prices dropping, this is a challenge for the industry because unit economics have to play out.
There is a lot of talk since for the last 2 days about the US tariffs, and gems and jewelry is one of the baskets that is big, even though you don't. But as an industry leader, what do you think is the impact? How do you see this playing out for India?
Early days. I think we should wait for all the talks to complete. Right now, there's a lot of posturing going on. Maybe this is the truth. Maybe there'll be some other deal. Maybe who knows where it will go. Let it emerge. I think even the government is trying to see where it goes. The government is very, very conscious of the role of gem and jewelry sector in the overall export piece, and US is an important market. I'm sure good sense will prevail and something interesting will come out. Otherwise, the industry will adapt and innovate. I think business and industry has to be agile and has to factor in all uncertainties that happen. So early days, we should wait and see where it goes.
And with that, we take your leave on this edition of Business Lunch. We leave you with the market still 100 points higher on the Nifty, and the broader markets continuing to do well as well. Speaking of the broader markets, Mid-Cap Radar takes the action forward on the other side. From me and the team that put this show together, thank you so much for watching.